Hello and welcome to another update video about optimism. Time for another video because we are approaching here a key decision point, an absolute key decision point in this potential fourth wave rally. This could turn into something more bullish, but I need to see proof in the first deeper retracement because this could be a diagonal to the upside. At the moment, due to the chart context, I interpret this as a wave 4 rally, which could lead to a new bear market low. But certainly, regardless of if it's going to make a new low or not, I think we're getting here to a decision point after a quite, corrective rally. I mean, this is also a potential diagonal structure to the upside, which would be the bullish interpretation. Is it preferred? Not at this stage, but the evidence will be seen in the first deeper retracement. So I would expect a correction from here shortly, but no sign that there is a correction yet. So what we're watching for here is potential diagonal wave 1, wave 2. We'd say this could be the wave 3, the wave 4, and we could be in the wave 5. Then we have 5 waves up in a potential leading diagonal, which would form a wave 1, and then a wave 2 pullback could be an ABC structure into support. I haven't got a top in place yet, so I cannot give you support at this stage, but it would be somewhere probably around 115, 120. And if it's holding that level, then it can set up for higher. However, at the moment, the context isn't great here on this chart. So I am primarily looking at this as a wave 4 rally. So this rally is corrective. While it can be counted as a 5-wave move, this would only be a diagonal. Typically, diagonal structures can also be counted as corrections. Okay. So I'm looking at this and interpret this as a WXY structure, wave W in 3 waves, the X wave in 3 waves, and the Y wave is currently pushing higher also here in a 3-wave structure, A, B, and the C wave here, a small ending diagonal. So it's WXY structure, corrective wave 4. Now, this is pushing higher still, and the trend is up in the very short-term time frame. In the last video, I highlighted to you that the $1.89 level will be the key decision point. So maybe it's going to get there. Oftentimes, what you see when you have these ascending wedge patterns is that before it breaks down, it does a so-called throw over. So it breaks out, up, failure, and then comes down. Just highlighting that. But at the moment, it's pushing. But I would pay attention to the 189 level. A break above that would make at least this wave 4 much less likely. It wouldn't necessarily be bullish, but it would certainly make this wave 4 less likely and would have some bullish implications. So 189 is the next key level. It's not only the golden ratio, which is a key level. It's a relevant level for a wave 4 in a diagonal. And we have structural resistance here at the same level. So I think it is quite a relevant level. Here, that's the 18th of May high, and here, which is the March low, same price level. And ascending wedges are typically bearish. Now, they sometimes break out to the upside, but eventually they often then still fail because it typically then leads to a larger 3-wave corrective rally. So, what can I say? I mean, they typically break to the downside. So probability-wise, I would pay attention to the trend line, of course, as long as the trend line is holding. The trend is up, okay? But you can see that we're heading into the apex. We're heading to key structural resistance and Fibonacci resistance. So let's see how it reacts to that level. But that is for me the next level to watch. And the break below the trend line could take it down, I think, quite swiftly to around about 115, 116, which is here the X wave low. And also, I mean, if I measure the Fib level, and I say, okay, maybe this is a leading diagonal, then it might be worth watching this area here, which is actually between 127 and $1.03. But we'll get to that when we see the breakdown. At the moment, the short-term trend is clearly up, but I would pay a lot of attention here. We're approaching an absolute key decision point. So for me, tactically, I don't think this is the best time to enter a long trade, but it might be worth to watch for either a short trade when we have a break to the downside from the wedge pattern, or when we have a break and you might only want a long, than to wait for a move down into this support area that I just showed you. But yeah, for now, it doesn't make any impression it wants to stop the rally. So I would pay attention to how it reacts to 189. What happens above 189? I mean, it could always break out to the upside right now. It might form something like an inverse head and shoulders. If we say maybe against all odds, it breaks to the upside, but it could then give us something like an inverse head and shoulders, left shoulder, head, right shoulder, and then go. And then the next resistance point would probably be up here around 280. So yeah, would pay attention to that. But at the moment, I think we have a pretty full fourth wave now. So I'll pay attention to the relevant levels. That's my update about optimism. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.